Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. We're going to jump right into the market here, live streaming from Ticker. The gold market and the silver market has activated some bearish triggers on a close below the sell 2 weekly level for the gold market. And let's take a look at silver here as well. The important thing for you to see and notice here in the silver market is that the market reacted from the harmonic level of the sell 1 weekly level and the sell 1 daily level of 28.68. The targets automatically are the level below, in this case, the average price of 28.07. What I would like to do on this segment here is to share with you a video presentation that I did on a basically presentation, a live presentation that I did for the Virtual Money Show last week. And for those that are just joining me here, this is a great video for you to listen to and pretty much get a good idea in terms of the work that I do here. Good morning, everybody. My name is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. And I want to thank you for the opportunity to the Money Show to allow me to make this presentation here, which I believe is a truly remarkable trading tool that essentially I have been using for the benefit of myself, my account, for the benefit of the house account. And we are at this point sharing with you self-directed individuals, self-directed traders, the variable changing price momentum indicator, automatic trading systems, mean reversion trading, the VCPMI, automated algorithm for trading stocks, futures, and ETFs, written by Patrick MontesDeOca and Scott McDonald, PhD. The basis of the VCPMI basically is the variable changing price momentum indicator that essentially identifies the extreme levels of supply and demand. And for the beginner, basically, this is identifying a very specific structure that we essentially trade that creates a very specific structure that you're allowed, or at least gives you the direction in terms of a GPS, some kind of a direction for you as a trader to be able to execute day trading strategies, swing trading strategies, and also long-term positions in the market. What you're looking at here is a regular chart that is showing basically just some indicators here, Bollinger Band and the moving the MACD, but it's pretty much a standard chart. And for most traders, beginner, intermediate, or advanced, this is the initial presentation of the chart and the product that you want to trade. In this case, we're looking at the silver market. This is basically the platform that we see here in TradeStation that we use to automate the algorithm. And this is the way basically that the chart looks like when we apply the variable changing price momentum indicators. The VCPMI is a combination of Fibonacci sequences, pivot points, directional movements, vortex mathematics that essentially puts the algorithm into a structure that identifies for you the average price. Once you identify the average price, then we can extrapolate the extreme levels above that average price for day trading purposes, for swing trading purposes, and for long-term position trading. The artificial intelligence behind the algorithm identifies the extreme levels above or below the mean by identifying them with color. The sell one level is a 50-90% relative implied volatility to the mean. The mean is a 50-50 standard deviation. The sell one level is a 2-to-1 factor of 50-90% relative implied volatility to the mean. The sell two level is a 2-to-1 factor to the relative implied volatility to the mean, which is a 50-50 standard deviation. The extreme level below the mean is a 50-90% standard deviation relative to the mean with a 1-to-1 factor. In the 2-to-1, by 2 level is a 50-95% relative to the implied volatility to the mean. So what we do basically is we trade the extreme levels above or below the mean. This is the structure for day trading. And as we come in today, obviously, we see that we have this structure in place. It's a prospective structure. What is the VCPMI? The VCPMI, again, is an algorithm that identifies for you the extreme levels above or below the mean. It identifies the average price and gives you 2 levels above that average price and 2 levels below that average price. As I showed you, the algorithm is available in TradeStation, and the basis of the algorithm, it uses a unit of 1 to identify the direction of the market, the momentum, the targets, and also gives you the protective levels where you want to manage your position once the signal is identified. We cover about 80 different markets, completely automated, from precious metals to stocks, commodities, and recently we have added coin and GBTC, which is the Grayscale Bitcoin Investment Trust, which are regulated ETF and pretty much securities. And this is, for us, an intelligent way to be able to get involved with that market in the most least complicated way, with the most liquidity available, that if you need to liquidate your position, you can do it immediately. Very highly liquid markets, particularly the new IPO that came out, coin. We track all the gold mining shares like JNUG, Nugget. These are 2-to-1 bullish mining shares. And we use pretty much the derivatives underneath the sector that we choose to use. So if you are a trader that you want to come in and you want to trade the gold market, for example, the gold market is one sector, one instrument in a major sector that involves gold mining shares, major miners, exploration companies, and you have thousands of different instruments that you can trade. The futures contract is the leading indicator to trade in the gold market, or it has been for the past as long as I can remember. And so what I choose personally as an individual trader, and what I suggest those that are interested in trading in the market, is that you first identify the sector that you want to trade. Once you analyze the sector, then you can analyze the instruments that are available within that sector. And then you can gauge and manage and analyze the risk of trading those instruments. One of the things that the VCPMI has done is essentially eliminate the standard deviation fluctuations in the market by identifying the average price. When the market identifies the average price, the AI tells you pretty much to go neutral. You don't need to take a risk at the average price because it's completed the pattern from the level below. What you see here on this chart is real-time trading, real-time signals that we're using here. And you can see the market coming down early this morning into the buy 2 level, completing this bearish pattern and reverting right back up above the levels that have been identified in blue. The AI identifies the extreme levels above and below the mean. The structure is a very simplistic Fibonacci structure of a maximum of 5 levels that identifies pivot points within those 5 levels. And within those 5 levels, the AI expands upon applying and integrating color as a function of the extreme above or below. And when it is in blue, it tells you that you have reached the highest, more or less, 90 to 50, 90% probability at the buy 1 level. At the buy 2 level, it's a 50, 95% probability that if the market comes down and completes that pattern, upon reversion and confirmation that buyers were found, the algorithm will close above it, above that level identified as the buy 2 level. And in the gold market, that was the 1822. The 1822 level was the buy 1. 1829 is the buy 2 level is 1822. Buy 1 is the 1829. And the market came down into these levels earlier. And activated a major buy trigger. Now, one of the things I want to point out to you, whether you're a beginner or an advanced trader, that the algorithm identifies the extreme levels above or below the mean. And I, as a trader, I choose and I teach my traders, my subscribers, basically, that when the price reaches the average, which it did, and we went neutral, when it comes down below the average price, what it identifies is the price trend momentum. And by coming down below it, it identifies a bearish price trend momentum. Automatically, when it identifies the trend momentum, the targets below are in place and activated as the buy 1, buy 2 levels automatically. So you know, by activating this bearish trend momentum, that these are the targets below. When the market comes down and for whatever reason, you know, you see this massive sell-off, whether it's manipulation or central bank selling, it's irrelevant of the fundamentals that got the price to these levels. It would identify the bearish price momentum, the targets will be in place, and automatically the markets will complete the targets by 1, by 2. And when you see the reversion occur by simply buyers taking all of the selling pressure that comes down here. The market reverts, gives you a buy trigger. This signal here is a buy trigger. And that's what we teach our subscribers, the methodology, basically the process in terms of the application and the execution of the VCPMI completely on an algorithmic basis. What I'm doing here, ladies and gentlemen, is I am reverse engineering the code that was written in C++ in TradeStation to automate the signals. The difference is that the system only trades a multiples of 1. It doesn't give you the exponential way of applying the GPS, so to speak, or the signals as a GPS for you to manage not only your speculative accounts on a day trade basis, but to create what I believe is an intelligent portfolio by capturing the short-term, intermediate, and long-term trends in the market. If you focus on just day trading, you're going to miss a lot of the swings and position trades. But you can build a portfolio using the VCPMI as an indicator, as a core position, and you can trade the short-term trends in the market like day trading or swing trading, which is what we do and what we suggest. The market right now, as you can see in gold, met the targets from the levels below, as the market, when the signal is activated, automatically gives you a protective level, which is the level below. Once the signal is triggered, it tells you, not only does it recommends for you not to use straight stops, except when the market is unfolding the direction or the momentum expected. That's the only time that you use a trailing stop. When you enter the position, the VCPMI gives you 3 choices of stops. A conservative one is to close below right away. You can get out of the market if it closes below here. The second one is what I consider a maximum dollar stop based on your profile. So if you have a maximum dollar stop, then you don't need a conservative stop. You can just choose a dollar stop. Excuse me. And the third one is basically the close of the end of the day. For day traders, you need to close. If you haven't completed your target in your day trading, obviously the discipline tells you to get out by the end of the day. But using this as a GPS, for example, in terms of multiples, you can use multiples here. If you're buying the market at an extreme level, a high probability level that is telling you that if we get a price confirmation, if the market confirms it, we're going to get a buy trigger with a 95% mathematical probability that the targets above are going to be completed. Not only the targets above once the signal is activated, but the average price. Once the average price is completed, you go neutral once again. And that's what has happened today. The market has completed the buy triggers from buy 1, buy 2, and has met the targets above. Right now, it's in a neutral zone. One of the things that basically I do is to provide access to the website here that you see. And for those that are interested in the book that we published here called Mean Reversion Trading, please feel free to come to my contact page here and just fill out the form, and we'll be more than glad to send you the book. In this book, I cover pretty much all the different components that make up the VCPMI. And you can click on here as well, and it will give you a chance for you to get the book. One of the products that we give you access to once you become a member is the ETF, the exclusive membership, which really gives you the algorithms that are produced by TradeStation. It gives you the algorithms on a daily basis, on a weekly basis, and as well as on a monthly basis. These are the algorithms that are produced by the TradeStation platform that we share for the benefit of those subscribers, basically, that do not want to use TradeStation or don't need TradeStation, but they simply want the data. We provide this information in our website. And not only do we provide access to our website here, but we also give our exclusive traders here access to our private trading room, which is a Discord platform that I use essentially to update literally 23 hours a day whenever there is a signal or we want to make some recommendations in terms of what I am doing. We particularly update frequently and share frequently our intelligence trades that we do, good or bad, profit or loss. And everything that we share here completely transparently, not only in our website, but here in the private trading room where I execute pretty much the intelligence. And upon confirmation of the trades completed, we make an effort basically to update. Now, one of the things that I want to share with you is the results that I've been able to accomplish since February of last year. In pretty much applying this intelligence in a live trading environment, I've done over 360 episodes daily where we have executed this information with Ticket Talker. I have a live channel daily that essentially we trade and we use this information. This is updated as of the 7th. And so we maintain a pretty current update on everything that we do here. For the purposes of compliance here, I would like to take just a minute to read to you the compliance requirement disclosure that simulated or hypothetical performance results may have inherent limitations, unlike the results shown in an actual performance record. Such results do not represent actual trading also because the trades have not actually been executed. The results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated or hypothetical programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses simulated to those shown. Trading derivatives, financial instruments, and precious metals involves significant risk of loss and is not suitable for everyone. Past performance is not necessarily indicative of future results. All prospective clients must read and acknowledge these risks. All prices are subject to change without price notice. We have a no refund policy. This is a disclosure that is essential and it's necessary in order for you to trade in these markets here. We want you to be aware of everything that you're doing, fully compliant, transparent in terms of your profile. If you come to my website here, you have access to Trading Live, which is basically a Ticket Talker presentation where pretty much I make a disclosure of the VCPMI, how it works, and so on and so forth. And you feel free in your own time, basically, to take the time to see it. We do a number of podcasts that we share. Every week we provide a weekly podcast, and we also write for Seeking Alpha. We write for the Associated Press, as well as doing live podcasts. So feel free to come and visit us, as we have just a tremendous amount of intelligence that we provide and give you access to, from podcasts to reports, live shows, live presentations. And we do publish this information in the Associated Press. So we apply the medicine, so to speak, that is recommended as well, and it does work. Coming back here to the track record, I want to mention to you that we have been testing this track record for about 9 years on a simulated platform, and it's averaged about 100% return on the simulated basis. And what we did is, in February of 2020, last year, we started trading this live, and this is the results that we have accomplished on a $250,000 account. We are up 378% return. The Equity Management Academy is a virtual online trading school with live trading room dedicated to providing traders with the education, training, and AI tools necessary to trade like a professional. Imagine trading side by side with a professional robot trader. You learn so much so fast. Our proprietary artificial intelligence AI trading algorithm, the variable changing price momentum indicator, the VCPMI, has an impressive track record and can help increase your confidence when you trade, as well as your returns, if you learn to use it correctly. The VCPMI methodology shows you precisely when and where to enter and exit any given market with 95% confidence, and can be tailored to your trading need as a day swing or long-term trader.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.
Let's come back here to the market and pretty much see what this intelligence has done for today. As you can see, taking a look at the silver market, the harmonic alignment is in that 2869, 2866 level. We penetrated that last night up to 2890. But once again, the AI tells you that when you enter into the area of distribution of supply in the red zone between the sell 1 and sell 2, there's a very high probability that we're going to find sellers or supply come into the market. And this is exactly what we have seen since last night at about 6:45 p.m. upon completion of the target. The market traded in this harmonic level, activating a daily and a weekly short trigger until 6 o'clock this morning, when the momentum unfolded in the direction pretty much of the trigger point, which was bearish. So we activated a weekly bearish trigger point and a daily trigger point. When the signal here is activated on both, you go down to the harmonic alignment here of the weekly at 2809, and it coincides today with the average price of 2807. So the target of 2807 is activated very clearly. If you took this short, either you took the profit here by trailing it, or enough profit from selling it at 2869, trading last at 29. That's a $2,000 range that is giving you. And I look for only about a $300 for day trading target. So sometimes the price range is phenomenal in using the VCPMI, but you got to manage your profits accordingly. So this is where we suggest, or the AI basically written in C++, recommends that when you enter a profitable trade, that you want to trail it with a stop. So if you're short, you can use the stop at the previous high of the last bar. And in this case, 28, actually the 2832 was just stopped out. Or in this vicinity, you can lock in profits, obviously. The VCPMI is a robotic, systematic, mathematical system that it tells you or identifies the trigger points and targets, as well as protective levels, but it doesn't tell you how you can manage the signal as a GPS when you go trading. Whether you decide that you want to do multiples at harmonic levels, which is the highest, most recommended levels for you to do multiple trading, multiples. And as the price comes down and gives you a profit, then you can use those multiples for you to lock in profits accordingly. In the gold market, pretty much it's the same setup that we traded into this weekly target, which is what I've been watching pretty much, as the obviously the weekly signal is of a stronger, more prominent weight in identifying, the intermediate trend of the market as opposed to the daily trend of the market. But here, the market got to 1875.90, not quite as high as the 1878 daily target recommended, but it failed in experienced supply, which is what the AI tells you up here. And these are the confirmations. So what you're going to see every time, if you take a look at the price into this red zone, you experience supply selling come into the market, profit taken from below. And once it comes down to close below the pivot point, in this case, it closed at 1871, 72 could have been your protective level, or 78, which is the level above, and the price came down to a low of 1866.90. We recommended this trade to our subscribers in our trading room, in the Discord trading room. We prepared our subscribers pretty much prospectively. And specifically and transparently, we provide the trigger points, targets, and protective levels, as well as we guide our traders with the momentum of the trade when it unfolds. Very specific support. We recommend pretty much, when to take profits. As you can see here, we completed the first target of $300, which is what I recommend my traders on. If you're doing multiples, the first contract the target be $300. You have a little more cushion at that point with the balance of your multiples. Here, at 6:50 a.m., silver and gold produced a weekly short trigger. We recommended a hedge on a 2-to-1 basis with dust, which is the instrument that we use to hedge over the short term. It's a 2-to-1 velocity ETF, but it does give us the liquidity that we want when we are hedging. We want to make it as simple as possible without complicating it, and it's a great way to hedge your position for a short period of time using these instruments. We went flat to gold at 1867 and collected another $400. So if you did 2 contracts here, you got about a $700 day trade profit for the day. And again, I make a point of sharing this information transparently for the benefit of those serious traders that are watching this, that are coming to the show. And by the way, I really appreciate all the comments that I've gotten recently. It's really rewarding to know that those serious traders that apply this information realize that this is a very powerful tool. And depending on, again, your profile, this is like giving you a loaded gun where once you see the light, so to speak, you see how powerful it is in what you can do with your trading based upon your skills, based upon your profile. Not every trader is homogeneous. So you want to find that comfort level for you to manage your account. The futures contract is an instrument that we use for day trading. And occasionally we hold on a position on a swing. But, you know, we're moving into a very, very highly volatile period of time. And so you want to be careful in terms of, how you trade, in terms of whether you trade a full-size contract or a micro contract. You can still get some phenomenal returns by using the micro contracting, using a little more prudent money management, and managing the risks of these instruments. Because as the volatility increases here, we're going to be seeing, I believe, unprecedented moves in gold and silver, up and down. And you want to be nimble, and you want to be prepared and disciplined. The key word is discipline, to systematically following the recommendations of the VCPMI. Otherwise, go ahead and continue to trade the way you've been doing it. But if you do want to make the difference in your results, it takes a little bit of discipline, confidence, trust, and conviction for you to change those results. And this tool has been able to do that for me. And if it can do it for me, it can do it for you too, as a self-directed individual, based upon your profile. Let's take a look here across the board here. Dust is up 23, which is the instrument that we're using to hedge a little bit short term. We got silver about unchanged, 28.27. A little bit of a pullback here on the balance or the derivatives. And we recommended in our private trading room yesterday pretty much to unload and hedge into that rally. And as it turns out, once again, the AI is giving us the right direction of the momentum of the market. And this doesn't change the longer term aspect, which is extremely bullish. But again, the market does trade in a mean reversion principle, that it will revert back to the mean if the prices reach extremes above or below that mean. And it's a constant. The only thing constant in the market is the mean. The speculation will trade above or below. And that's what we want to extrapolate always, is the mean, because once we can extrapolate that, then we can build the structure that we have, basically, which is a perfect Fibonacci structure of 5 levels. And now we know pretty much exactly, what we're trading against. And the average price here, for example, 1859, completed the target of the weekly, which is 1833. When the market closed above 1833, it activated this target of 1872. And we had this information prospectively published on Saturday. Once again, on this chart here, the daily chart, you can see the market rejecting these levels where the AI identifies it to be a highly probable mathematical area where you're going to see supply come into the market. And for all intents and purposes, it seems to be putting in what appears to be a potentially key reversal to the downside, right within the trend line resistance even of this uptrend line that was created here from the low that was made at 1677 on the end of March. I would say that based upon the targets here where we are, it appears that this could be the potential area where the first wave was completed. The first leg is completed. The first leg of this movement of 5 waves up. So it's interesting to see what the market will do from here, but following the path of least resistance and the AI of the variable changing price momentum indicator, it's telling you that you got to be fading this rally. You got to be fading this rally up here until it breaks above 1787, which is the sell to level daily, and above the weekly of 72, then we have nothing on the upside. Pretty clear all the way up to 1964. So are we breaking out of this pattern? Is the market on a breakout? Is it going to break out here? It's anybody's guess, obviously. But if you look at the mathematical probabilities, it's telling you that it's going to be very difficult to get through this. This is a hard ceiling of resistance that we're looking at. So we locked in some beautiful profits here. We're sitting on a hedged position with an upward bias, with a bullish bias. Our long-term core position is bullish. And we recommend basically to buy into these corrections. If we get this ideal correction back down maybe to that 1809, 1818 level, I think that's going to be a great place to get net long once again. But in the meantime, take protection up here. The market will trade on its own technicals, not the fundamentals, as you can see. And one may argue that the bullish fundamentals is what drove this price up here, which is very, very possible. But then again, has it stalled out up here? The buying that was that came in here, is it, according to the VCPMI, it's telling you it completed the target. So here's the difference between just a regular chart and pretty much what the VCPMI tells you. Here, if you had a regular chart, you would know, or if you use conventional technical analysis, you would be looking at a breakout here. The market broke through this trend line resistance and, all gone ho on this move. The AI, the VCPMI is telling you, caution up here. you're in red zone daily, weekly, monthly. And this is a mathematical probability, a very high mathematical probability that we could see supply come into the market. So I'm taking a very defensive position. I'm recommending my traders in my trading room to have a defensive position, a hedge position, and ideally look for a reversion back down again into these levels of about 18.19, and ideally even as low as 17.95. So be careful about following the herd. Be careful about following all these pundits on the internet calling some outrageous prices for gold and silver, as opposed to just letting the market and the VCPMI guide you through that market. I want to share the report that we published on May 16th, which was the report for the weekly report as we come into this week. And the summary of the report stated basically the weekly trend momentum of 1772 is bullish. This is the moving average that we use to identify the trend momentum. It's one of the first filters in the report. The weekly VCPMI of 1833 is bullish price momentum, and the market came above that level. And by closing above it, it activated a bullish price momentum. I think it closed at about 1838. But also here, the AI tells you, first of all, not only when the price momentum, the bullish price momentum has been activated, but also tells you that it closed below 1833 would negate this bullishness neutral. And this level is the level that you can use as your protective level. It tells you precisely. And it also tells you precisely where to take your profits. If you're long, take profits 1858 to 1872. And the high today was 1879. Very accurate. 1875.90 was the high today. You can't get any more precise as far as a mathematical calculation, a prospective mathematical calculation. So you can see from the monthly resistance level of 1809 that once it penetrated that, it became support by coming down here, testing it, and activating it activated a buy signal here, a bullish pattern activating a weekly buy signal at 1819, and then following through with a daily signal and a weekly target completed. And upon completion of this target, it created a bullish price momentum. The targets above, as you can see, were completed, came down, activated another buy signal here as of yesterday at 6:15. Actually, as of the 17th at 6:15 a.m. And, we're trading with a high 1875. It completed the extreme level above the mean. This is the structure. The average price, the extreme above the mean, the extreme below the mean. It came down below the average price to the extreme below the mean on the weekly, activated a weekly buy, target completed on the target. It activated a bullish price trend momentum, target completed. The daily now activated a buy trigger above 1849, and the weekly target was completed. The daily 1878 target still open, but you could use the nearby targets of the weekly here to lock in your profits on your trades. So if you noticed here that I have focused primarily on the mathematical functions, you might say, and components of the variable changing price momentum indicator to show you that it is a pretty much independent algorithm of the fundamental rhetoric, you might say, that lags the market, and pretty much very difficult to sometimes trade on that basis. Thank you once again, ladies and gentlemen, for giving me the opportunity to expand upon this incredible intelligence. And I sincerely hope that you are benefiting this and that your results are beginning to show. Have a great day. Have a great trading rest of the week. I'll talk to you soon. Be well. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian